Hello, this video is for investors. So, welcome. What I want to do is run through a few slides and show you if you wanted to invest in real estate in Victoria and help a couple buyers into the market, how that would work and why your investment would be safe. So, in this example, I'm using $100,000. I'm suggesting that you charge the buyers 10%, and that would be compounding interest. So at the end of a 5-year term, you would make 10% compounding interest, which works out to about $161,000. So your home is going to go up in value as a rule. And I'm going to show you these slides where there's no increase in value at all. And then if there was a 3% increase per year and what that would look like. So we're starting out with $1 million home. The buyer puts down 75,000. The investor puts in 100,000. So there's a total of $175,000 down payment. Mortgage starts at 725,000. You're looking at 125,000, or sorry, $1.25 million home. The buyer puts in 100,000, the investor puts in 100,000, so you've got 200,000. Mortgage starts at 950,000. So the benefit, of course, to the buyer is that they're starting out at a little bit lower mortgage, and so their monthly payments are going to be lower as well. When you get up to a $1.5 million home, it's a little bit more onerous for the buyers. They're going to need to come up with $300,000, and the investor could still put in $100,000. And so the mortgage would start out at 1.1 million. So that's the other scenario. So this slide shows that in the light blue, basically that's a flat market. So as you can see, we go across, the market doesn't go up at all. It's just the purchase price of the home that's showing in the light blue. And if it does go up at 3%, it's showing the dark blue and how that would affect the value of the home. After 5 years, the flat market is obviously what you paid for the home didn't really go up at all. But the darker green shows the amount that the home has gone up based on 3% a year. So how much cushion sits above the investor payout target? Well, the safety cushion, it basically is a flat market. So in other words, if you're looking at $1 million home, you need to supply $161,000 back to the investor after 5 years. So if the market did not go up at all, there's still enough room on all these models to pay out the investor. But if the market does go up 3%, and I'm using this as probably the higher end, over the next 5 years, you've got a $130,000 cushion essentially on $1 million home, $160,000 cushion on a $1.25 million home, and a $263,000 cushion on a $1.5 million home. So the key takeaways from this slide presentation: if the market stays flat, an investor can still be repaid after 5 years. If the market rises, it just becomes easier. So the takeaway for the investor is the return target stays fixed, but the market going up gives added margin above that target rate. So it makes for a more comfortable investment. So a couple things to note about investing in Victoria. I think it's very safe. Uh, the the basically the market here in Victoria, we're surrounded by water. The land that's available for housing is very finite. They're building condos. Those condos go up in the sky, but not everyone wants to live up in the sky. So if you want your little piece of ground for growing a garden for kids, for pets, just to be able to enjoy having a yard, the amount of land available for that is pre-existent. It's there. You can't expand it anymore because we can't build out into the water. It's not like Calgary where you can develop another 160 acres or another section of land. So that's what's going to preserve the value in real estate here in the future. Some of the other things I'll just touch on because I could go on and on about why Victoria is a good place to invest, but we're the seat of the government here in British Columbia. So there's lots of employees here that work for the government. We've got the Navy, we've got the universities, we have over $3 billion in high tech businesses, and they're not, you just don't walk down the street and say, hey, there's a high tech business. A lot of them work, of course, out of their homes and around the Camosun College area. But that's the number. Over $3 billion worth of revenue is generated in the high tech industry. And then we have what we call the gray hairs. They're people that have moved in from other provinces, and they've decided that they like the weather here. We have the mildest climate in Canada. So people pack up their money and bring it here, and they want to retire here, and they're going to need services. They need healthcare. They need gardeners. They need handymen, people that are able to look after their home for them and keep it in good shape. So they're people that have their money invested, and they don't take from our economy. They're not taking jobs from anyone else, but they need people to be able to look after them. So one of the reasons that I think Victoria is a good place to invest in, and I know that the market will go up over time. I know that it's not going to go up like it did in the crazy years of 21, 22 after COVID, but it's going to be a steady, slow rise. So if you're an investor, you want 10% compounded interest on your money, please talk to me. And I'm sure you're going to make some people really happy as well. And we can call you an angel investor. So thanks for listening, and we'll talk to you again on the next one.